Welcome guys back to this channel. So in this video, we're going to talk about the biggest risk that you take when investing into Palantir, explained in a super simple way, which everybody can understand. Tom Nash did an interview with two fantastic guys, and I'm going to link the video down below. It's a 1 hour and 20-minute interview, and I don't think all of you are going to have time to watch that. And this piece is sort of in the middle of it, and I thought that it was that important that I want to make a separate video about it, because Palantir as a product is very hard to understand, and because the product is very hard to understand, it's very hard also to understand what is the risk that you're taking when you're investing into Palantir, like in which ways can this product fail. And it's even harder to find this explained in layman terms that everybody can understand. So as always, if you like this content, please make sure you hit the subscribe button. And if you want to go further and support the channel, check out the first link in the description, which leads us to our Patreon, where you can support the channel for $5 a month and get access to all the valuations. You get direct access to me and my eternal gratitude. So thank you so much. And let's begin with the video. So to fully understand this subject, first, I have to give you an explanation of Palantir's go-to-market strategy and their business model.
The go-to-market strategy is we're going to generate massive network effects for the largest customers in the world by creating these consortium models, So when they create a strategic partnership, that's a business consortium. What they're relying on is the more people within that consortium that use Foundry, the more valuable Foundry gets. And that's how they're going to grow it, But it's questionable whether that's going to work, but I don't question the timing of when they brought it to market, because that was the only time, the exact right time, a product like this could actually be feasible financially. All
right, so I'm supposing not everybody is a business expert. Even I had to look up this word to fully understand what this means. A business consortium is a group made of two or more individuals, companies, governments that work together in achieving a common objective. So for example, this could be like the FBI, CIA, and the MI6 in UK and European police working together. And if these, let's say when the CIA and FBI, when they're working together and they adapt Palantir, then when they take a third agency, like let's say the UK agency, to work with them, then they're going to require them to also use Palantir, because that's the, least resistance forward. And then once, three of them in the consortium is using this product, then it starts becoming the standard. So every time, someone else joins this network, they will automatically be required to use Foundry, to build apps on Foundry, to train their people on Foundry. And this obviously results into this product being super sticky. Then another example of this is, for example, if you take Stellantis, which is an auto company that works with Palantir, and then, they have a huge global supply chain to manage. And then if they start having a common database with the suppliers, and then they say, okay, you need to use Foundry, and then they take those companies and then they start forcing their suppliers to use Foundry, because, then it's so easy to manage the supply chain. And then basically Foundry becomes the industry standard, becomes super sticky, and you can't get rid of it. And it's actually a very awesome go-to-market strategy as long as it works. So now we go to the video where they explain exactly what is the risk with this and what can happen. And I'm going to make some super important comments in the end before you start selling your shares when you hear this.
So would you say Palantir is more geared towards companies that have a tremendous amount of data and needs from a data perspective versus, say, a large majority of companies? So I'm trying to figure out, as I think about Palantir's long-term customer base, right? So far, so based on some of your explanations you've given, is that it's a tool that has a lot of capabilities. It sort of reinvents how traditional engineers would interface with a product like this. But it sounds like the feature sets it has and the capabilities it has are profoundly great. Okay. But is this reserved for, say, your Facebooks and your Googles and your Pfizers, like your really, really large companies that are going to have a lot of data? Or is this something that is also being geared towards, say, a humongous majority of the businesses that exist today that have data but they don't know how to use it. Like any sort of small business, right? You can pick and choose whatever business you're talking about. If these guys want to take advantage of the data, they have to hire some third party dude that's in a different time zone that is not doing what they're asking, right? So how is Palantir viewing this market, or is it just not geared towards that? Because I think if we really think about long-term potential of BI tools or any sort of tools that leverage data, I think that is the market that they have to crack. So I would love to hear a little bit more about that.
Yeah, I mean, we all know that, like, I mean, we're not talking. What's funny is, like, there's a book called Palantir Foundry by Use Case. This guy Kai wrote it. It's dope if you want to check it out. It's a good way to kind of learn more about the platform. But like, sure. In there, the book opens with like a use case of a woodworker who makes, like, I forget what it was. Maybe it was like Russian nesting dolls or something. It was a small business though, maybe like 15 or 20 people, but explained how they were able to improve their business using Foundry, right? So like, but I think the broader point is, like, BI and data analytics is valuable no matter what business you're in. I mean, Tom probably uses BI and data analytics to understand his YouTube audience. You know, it's like you can be a one-person shop and take advantage of data. I don't think the size of the org dictates that. But I think the broader question, the one to unpack in there is, like, how is Palantir seeing this problem? You know, and like, I think it's obvious from their go-to-market strategy they're not going after the SMB space. You know, like it's straight up full-on enterprise. You know, yeah, that's it right there. Kai's dope. He has a great relationship with the people at Palantir.
Well reviewed, so. 4.5 stars.
There you go. So I have that book. There's a second.
It's all fake
another
reviews.
One
it's all fake reviews, bro. It's all purchase reviews.
It's all codestrap. I'm just kidding.
Yeah, exactly.
And his dad.
It's funny. But
I heard a lot about this book. I heard the book is legit, actually.
It's legit, and he has another one out too that talks about using it in the intelligence kind of space. But so, like, I think Palantir is absolutely going after enterprise. You know, they're not going to be going after the same customers as Snowflake or Salesforce right now. You know, but I think that speaks to maybe where they're at with the tech. You know, and like it's just not ready to scale to, 25,000 customers. They're looking at it as like, we want to get the global 2000. We want to get the enterprises where we can generate massive network effects, and we'll scale our technology and invest in make investments to scale our technology alongside those initiatives as more and more people on board with this system. Now, that's a really risky strategy if that is and I'm speaking for myself. This is an intuitive understanding of where I see it, but that is an incredibly risky fucking strategy. No one I know has ever gone to market that way. Every single product I've been associated with from day zero is infinitely, like, we have a scaling model built in. You can sign up on the website. Customers are onboarded into a multi-tenant environment automatically. There are no scaling issues. So like it's weird that they wouldn't be walking and chewing gum at the same time, going after both markets. I think that points to some inherent issues related to scalability of the product. I don't know that. I'm speaking for myself, but that's my feeling. But I don't know if it matters in the long run if they're right. If they're right about how this product can generate network effects for their customers and their strategy works, they win. If they're wrong, they fucking lose, and they lose big time. And they've lost in other spaces. They lost in the data warehouse space. Why did they lose in the data warehouse space? Because they didn't go to market 7 years before everyone else with a data warehouse product, So that inability to read the market and get good product market fit could be a weakness for them. It's something that I worry about a lot when I see their strategy playing out. But at the same time, I love the product. I can see how it's going to be a huge win for those orgs that are adopting it. I wish my org would have adopted it, but I think that I see a lot of potential upside in what they're doing. It's just you got to be right.
I think that for me is like from like the perspective of an investor. If I were to put and then maybe Tom, you can sort of add your 2 cents in this too. Is like I have no doubt that the product is really good. Like from the very beginning, I knew the product has to be good.
But that's a change in lingo since their first. Like you were not sure when we spoke.
I wasn't sure. Yeah, but to have somebody,
now you're sure.
Somebody who. I'm sure that it's a good product, because we have somebody who obviously has experience, is somebody that's it's able to verbally say in a technical manner, like two technical people were sitting down, understanding why it's a valuable product. But I'm still the one thing that I'm still skeptic about is from an investment perspective, say how are we sure that this is going to be a company that's going to have a runway from here to say 5 years from now, if the scalability and its go-to-market strategy could potentially hamper it, right? Because of how adamant they are.
That's the risk,
about,
man. That's why the stock's not at 100 right now, right? So like, in my opinion, and by the way, like just full disclaimer, do not invest based on what I'm saying. I do have a relationship with Palantir. I do have access to a free Foundry stack. I have to give some disclaimers, but like, I can't really speak to the stock, but I've been calling this out.
You're prohibited from speaking.
Yeah, I can't even speak. But like, that's the execution risk, right? That's what I've been calling out
the
on
marketing.
my channel.
You can talk about the strategy, the market. Like, don't say anything about the stock. I don't want you to get into trouble because I know the rules and regulations. Unfortunately, you can talk about the strategy, and you can.
The strategy is inherently risky because of what you're saying. You know, like that's an inherently risky strategy, and I always say, like, what happens down market, like with the snowflakes and the Databricks, that's going to have an effect on you, you know, because that's who gets certified, right? Like, if all the engineers are certified in Snowflake and not Foundry, that now we're having hiring pool discussions, right? So, like, these are things where the competition gets a vote, the market gets a vote, and if they decide to break a different way because your platform wasn't accessible or affordable or whatever, like, these are all inherent risks in a go-to-market strategy that says, hey, we'll worry about the SMB space later. Let's focus on the enterprises because that's where the network effects are going to be generated. Like, you know, it's risky.
So there you heard it. But before you sell your Palantir shares, you need to have two arguments. One of them is Peter Lynch and, you know, all the big investors say that when people like your stock and the opportunity is obvious, also based on the effective market models, then it's priced in, right? So we are early investors into a product. And if the product was perfect, the stock price would be $100. So obviously they have some kinks to be worked out. And I trust that this is going to be worked out. And I think this was a fantastic description of, you know, how it can go wrong and how it can go right. Then the second thing that I want to say, and it's also an earlier video that I did about this, is how transformational is Palantir's product? Because obviously if you take a SaaS product that is a software product that is basically an iteration or a small function, it's very easy to have a freemium and, you know, very easy to scale the product. But when you have a very transformational product like a cell phones, for example, if you remember the first cell phones that came out in the early 1990s, they were like large bricks and they were completely cost prohibitive, and it was only the super rich that was using them. And as the technology was, you know, advancing forward, then the models became cheaper and easier to use, and then it was easier for the masses. I believe that Palantir is going down the same path. There is, again, I really recommend that you watch this full interview because there's a lot of info here of why Palantir came about now and why it was only possible to do such a platform now. But the point is that I believe they're very, very transformational, and they're not trying to scale to everyone because the product is just not there. And instead they're going after the biggest companies where, you know, they have money and they can, you know, prove out their value, and they're going after this network effect. And obviously if this works, then they can perfect the product and then make it more and more available, you know, down market. And then obviously the risk is that if Snowflake and smaller companies, they go from the bottom up, so they have like a bad product that is, you know, 70% doing the job, but a lot of people start using it, and then they keep making it better and better, and then it goes faster than Palantir's, you know, going down on the market, then they can be completely obsolete and, you know, outmaneuvered on the market. So this is the risk. Obviously, I'm an investor in Palantir and I'm adding more shares, and I thought it's fantastic to understand this. But let me know what you think. Does this make you scared? Did you know this before? Was this content valuable to you? Thank you as always for watching, and I will see you in the next video. Bye bye.